Welcome to Multiple Perspectives. This is the Weekend View, where we bring you the latest insights and trends in real estate investing. I'm Ashley Shoemaker. In today's episode, we're delving into the recent trends in inflation and interest rates, and how these economic shifts are creating unique opportunities in the real estate market. The latest report from the U.S. Labor Department has brought some optimistic news. April's Consumer Price Index rose by 3.4% from a year ago, signaling a slowdown with the core inflation rate, which includes food and energy, climbing only 3.6%. This is the smallest increase we've seen since April 2021, indicating that the Federal Reserve's efforts to manage inflation might be starting to take effect. Importantly, this was in line with the Fed's expectations. Moreover, while rental rates have increased substantially over the last 3 years, not all property owners have adjusted their rents accordingly. This gap, particularly in properties where rents are approximately 30% below market rates, suggests a latent value that can be unlocked through more effective management. Following the CPI report, we saw a decline in 10-year Treasury yields and a positive uptick in stock market performance, suggesting growing investor confidence. However, the Fed seems inclined to maintain the current interest rates in the short term, with potential cuts unlikely before September. This cautious approach aims to ensure that inflation steadily returns to the target levels without abrupt economic disruptions. Despite these positive signs, economic pressures remain. Costs in sectors like gasoline and housing continue to drive the inflation index, affecting everyday budgeting for American households. Consumer sentiment has dipped, influenced by persistent concerns over high inflation and interest rates, which could impact economic activities like housing purchases and investments. In commercial real estate markets, the rapid increase in interest rates over the past year has resulted in lower values, with properties available at significant discounts compared to both their appraised values and prices prior to the rate hikes. For investors, this could mean a chance to buy at a low point, especially as interest rates are anticipated to stabilize or decrease, potentially leading to a recovery in property values. Properties with untapped rental potential and strategic management plans stand out as a bright spot for investors, offering not just stability, but also the potential for significant growth as the market adjusts. One such property investment was recently brought to the EquityMultiple platform by a seasoned regional operator, Daniel Management Group. DMG Capital has a solid track record of implementing mark-to-market strategies in the Chicago area, yielding high returns from similar investments. The linked mixed-use opportunity is an investment in a stabilized property that benefits from untapped potential, both in terms of an attractive acquisition basis as well as sub-market rents. This opportunity is targeted to close at the end of May, so investors interested in learning more are encouraged to reach out soon to ir@equitymultiple.com. We'll also put a link to the investment in the show notes. Thanks for listening. We'll be back in your feed next week with another Weekend View from EquityMultiple.
This communication is not to be construed as an offer to sell or the solicitation of an offer to buy any security or provide investment advice. Any such offer or solicitation can only be made by means of the delivery of a confidential private offering memorandum. To the extent that performance information is contained in this podcast, past performance is not necessarily indicative of the future results, and all figures are estimated and unaudited unless otherwise noted.